Hello, everyone. Today we are going to be talking about profit first, because I love things that are trending. Not that I love them, but it's always good to be in the know. Most of you may or may not know that I basically bought this house. So after being broken on the bones of my ass when I moved here 13 years ago, had absolutely no money. And then as a single self-employed woman with 3 children, I was able to buy this house 2 years ago now. And I did that by following The Barefoot Investor. So did anyone ever read The Barefoot Investor? Read that, followed the principles. I did also work with a mortgage broker coach to put myself in a position so they would actually give me money for a mortgage. And it did work. So there are ways to do things, and it's always good for us to be in the know. So Profit First has been around for quite a while now. It has been trending. So many people have been talking about it. So I thought I'd go do a bit of research. And to tell you the truth, I did cheat a little bit, because when you go to buy the book on their website, they do then invite you to pay, I think it was $75, to pay $75, and then you can actually attend 2 live webinars where they go through the principles within the book. So I did cheat a little bit. I did go pay the $75 and watch it, because I thought then I would actually get to see it. But again, with daylight savings, I didn't actually get to see it live, and had to wait a whole day and then watch the recording anyway. But there are heaps of valuable resources online, and I thought I'd just share with you my takeaways from the book, because if you want to make money, you have to get better with managing money. And that is a fundamental, it becomes a fundamental thing. And in fact, when I created my strategy program, probably about 7 years ago, there were 2 things that I didn't really have in there, that only really snuck in there in the last sort of 5 years. So in the first 2 years of the 7 years, the 2 were, and some of you are just going to go, oh my gosh, Chantel, how did you not prioritize them? But it was, number 1 was mindset. There wasn't enough on mindset. And number 2, there was not enough on money management. In saying that, there were things that I was doing as a business owner, but I didn't include them in my program. And it was only probably 2 years in that I went, you know what? If you don't have the mindset, you're not going to make money. And if you can't manage your money, you're not going to make money. So I must say, I personally was fortunate enough. Some of you are going to go, what? But I personally was fortunate enough to have been literally broke on the bones of my ass. And I say fortunate enough because I honestly believe, especially here in Australia, where you've got Centrelink and welfare, and you have financial support, and you have government grants and funding. I'm from South Africa. We didn't have any of that. If the money ran out, the money ran out. So when I moved here and we didn't have access to welfare for the first probably around 5 years, if the money ran out, the money ran out. And it meant that I had to get good at managing money. And Barefoot Investor, as I said, was the first book that I did, and it was highly beneficial. So now I'm into Profit First. I'm structuring my company, my now company, around it. And it's challenging. Doing anything new within a business is challenging. You can't just go, I'm going to follow the Profit First principles and wake up tomorrow and my money is all going to be better managed. I'm going to live happily ever after. It is a process. And it is challenging. And the first couple of months, it's really stressful, because you're looking at everything and you're going, OMG, like it's not working. And how am I supposed to do this? But the reason it's so difficult is because things are out of an alignment. Things are wrong. And if things are out of alignment and things are wrong, it means you're not going to profit and you're not going to make money. How many business owners are not paying themselves enough money? Like, they're paying all their expenses and there's nothing left in the bank. So I created this for us today. Really fancy whiteboard in Zoom. So if you haven't tried the new, I hope it's going to share it with you. Let's see. Can you see that? Somebody unmute and just let me know if you can see that.
Yep.
Oh, thank goodness.
Got a screen. Yep, all good.
Perfect. So,
but is it meant to be like, it's not?
Can you see that?
We haven't got it's a bit like zoomed in.
Okay, so you want me to zoom out a little bit? Is that better?
No, that hasn't changed. I don't know if anyone else is the same, but the top left-hand corner is all chopped off, and
I'll move it down. Can you see that?
Nothing's moving.
Share. Temporary, hold on a sec.
Maybe
Editor, viewer, make permanent. I'm trying to give you permission here. Only invited users.
Yeah.
Invited. So can you all see that? Sorry, it's my first time using the Zoom share whiteboard.
I've just done it and it's gone smaller.
Okay, cool. So everyone can see it now, all on a page. You should all be able to see it. If you can't, let me know. But yeah, it looks like I had to go in, I had to share it with you. So I've just done that now. All right, cool. So here's my notes. And we're going to start on the right-hand side, okay? It all comes down to money management and sustainable income and sustainable profit, okay? It encourages profit over expenses. It's to make sure that you stay out of debt, which is important. Pricing for profit. So it's making sure that your pricing is actually allowing you to profit. It's around clarity on budgeting. And it's, and I love this, it's the feast to famine roller coaster ride that business owners often go on so that you have improved cash flow. So previously it was all around sales minus expenses equal profit, but profit first is all around sales less profits equals expenses. And I wrote this in there because it's not an overnight solution. So it doesn't mean you mustn't get started. It just means that you mustn't have this mentality that as soon as you do it, it's just going to improve. It is a process. It does take time. I know for me to buy my car using the principles of my bookkeeper and budgeting to purchase my first car, it took me a year to be able to budget and buy it without, I wanted to buy it without going into debt, without, buying it on HP or whatever you call it here in Australia. But so I paid it outright. And in order to buy my house, it took me 5 years. So it's not an overnight solution, but if you don't start, it's not gonna work. But it's also by starting, you're going to identify holes inside what you're doing currently. So it ensures profitability, it sustains cash flow, it increases your income, spelling error there, and builds your profits. Okay. You have to set up 6 accounts, and don't worry, I'm going to give this to you. So I will give you this screenshot, and you can also have access to this recording as well with my hands waving around. But you have 6 bank accounts, and really, I think it's 5 for me. But one is profit, and that's your savings account. And basically, you're going to put 5% of your income in there. Then you've got your tax and GST account, where which is a savings account, and you're going to put 15% in there. Owner's pay, which is 50%. So 50% of your total income is going to go in there. Then your revenue, which is your transaction accounts. That's all the money going in. Your operating expenses, which is also a transaction account, which is 30%. And materials and subcontractors is also an operating expenses account, if it's applicable. And that'll be part of that 30% in the operational expenses. So these things may change based on your business structure, your current debt, because obviously we're all different, your GST tax, so some of you may not be GST registered, your current expenses, your current revenue, your business and financial goals. And from following these principles, you will grow in profit, you will pay your GST and tax on time, you will reduce your debt and stay clear of it, you will have money in accounts rather than not having money. And you will get paid as the owner. So many business owners don't get paid or don't actually pay themselves a wage or a salary. So I think that's really important. So if we move across to the left-hand side, if you have a piece of paper, I'd love you to do this exercise. So piece of paper and a pen. Now, here's the thing. If you do not know your figures, like straight away, if you don't actually know your annual income or your profit, or your tax or your GST and what your expenses are, your business is in serious trouble. Like, I cannot say this enough. If you do not know your numbers, you are in serious trouble. So you would have done your tax return at the end of the last financial year. And if you haven't, again, you don't know your numbers and you can't plan for the next financial year. So you are in trouble. The number one thing is Know your numbers. Go and find out right now what your numbers are. And don't guess. If you are guessing, you do not know your numbers, you are guessing. It is one of the biggest eye-openers ever. And Jane, you said you've read the book, but if you have not gone and done your numbers, there is no point of reading the book.
Yeah, no, I'm halfway through. But in my situation, last year was a year that I did not spend on my business full time. It was very much a passion project. So I kind of feel like I've been given a little bit of I can actually start from this year.
Yeah, perfect. Yep.
And actually
set it up and move
more
forward.
forecast rather than last year, because last year I can't base it on that.
Yeah. Yeah. Look, there's still things that you could do, and I'll go through it now. Because if we look on the left-hand side over here and you look at your revenue, you can see here that the percentages do change based on your real revenue range. Okay, so based on your income. So depending on what your income is, you can see the percentages. Now, just for the sake of this exercise, I've just worked it off column A, which is if your income is up to 250,000. Okay. And it's really easy because if you have a look, and again, this is just an example. If I go, my current income, so all the money that I get in a year is $100,000. That means my income should be around $1,923.07 weekly. Okay. Again, this is an example, but you need to do this for yourself. What was your current income for the last year? And write that down, all your income. Then you go, your profit should be 5% of that. So you take 5%, which is $5,000 in the year, or $96.15 per week. And you take that weekly and you take it and put it into the profit account. Okay, so all money comes into the revenue account. Then you take it out, take 5% out, put it into the profit account. So I've worked it into weekly. So that means you know how much weekly to put in. Then you've got your owner's pay. So you go, right, 50%, if I'm looking at column A, 50% of my owner's pay is $961.53. If my income was $100,000 for the year, I need to be paying myself that, plus your superannuation. Actually, I don't know where super fits into that. I need to look into that. Guys, if anyone has an answer.
Yeah, I found out that one that I was asking about, which I can't remember the name of it, it's basically owner's pay.
Yeah, it was an owner's pay. Yeah, yeah. Super. I'm wondering whether or not superannuation falls under.
I don't know. I
put the superannuation and the tax in the same account, Chantel.
Okay. Yeah,
because you got BAS, PAYG, and super.
Yep. Okay, and they go into the tax account.
Good idea.
Yep.
You know, it should be 30% rather than or higher.
According
than 15.
To this, according to this, it's 15% is your tax and your GST.
Do Americans have superannuation? Because this is all based off an American.
Yeah, good to know. Look, I'll ask. I do have a bookkeeper that I can ask about this, so I will find out. And then we've got your tax, which is 15%, which on 100,000, if your income was 100,000, it would be 15,000 for the year, which is $288.46 per week if you were allocating weekly. Remembering you've got GST as well, so that would be tax, it would be GST. So is that 15% of each? Yeah, good question, because it would be 10% for tax, 10% for GST. That's already 20%. Yeah, that's really interesting. I allocate 30%, to tell you the truth, because that helps me cover bank fees and everything as well.
Yeah, my bookkeeper said 20% for tax.
Yeah, I do 30 because it's 10% for tax, 10% for GST, and then it's 10% for bank fees. Bank fees and other stuff. So that's what I generally do. But yeah, if we're following profit first, remembering this is just an open discussion on how we've read the book or the book club or how we manage our finances. And then we've got operating expenses, which is 30%. So and that comes down to $30,000, which is $576.92 per week. Okay, and we are in Australia. Thanks, Clinton. Clinton shared something there in the chat box as well. So we'll have a little look at that later. So with operating expenses, this one over here was a big eye opener for me because operating expenses are accounting and legal fees. So like my accountant's $500 per month. All right. My bookkeeper is about $115 per week. Okay. So these were big eye openers because when I looked at the percentage of 30%, my staff, my wages, and all of this ended up becoming way too much. Like I worked out that my operating expenses were way too much. Okay. So sales and marketing costs, travel expenses, entertainment costs, research and development, office supplies, rent, repair, maintenance, utility, software, salary, and wages. Software is a huge one as well. So I just subscribed for Jotform again. It was $350. It ended up being about $580 Australian. And I'm like, it wasn't worth that. If I'd known it was going to be that much for the year, I just wouldn't have paid. So when you look at that, it helps you go backwards to go, or either I've got to make more money or I've got to reduce my expenses. Those are your two options. Okay. So once you do your current, the next thing to do is to set yourself a goal and go, okay, if I'm going to set myself a goal, it's 500,000, your real, your profit, your pay, your tax, and your operating expenses based on those new percentages, if that's what you're wanting. And those figures there are incorrect because I used the wrong percentages. It would be 35% of owner's pay if it was 500,000. So you actually earn less money. So I'll go in and I'll change those figures. So based on that, like, what do you do next? So can you see that? I'm hoping you can all see that. So this over here, I don't take credit when credit's not due. I found this online from doing my Googles. And it was fillingmgmt.com. And this over here was pretty cool because I found this step-by-step thing that you should do, which I thought is a great summary. And it gives you what you should do daily in 3 steps. And then what you should do on the 10th and the 25th of every month, and then every quarter and every year. So as business owners, you can manage your own finances, or some bookkeepers, you can actually get to do this for you. And there are specific profit first professionals who can do it as well. But it was quite interesting to see that on the 10th and the 25th of every month, all the money in the income account needs to then go in the allocated percentages out. So you're not doing it every day. You're just doing it in the 10th and the 25th. All the income, you then take the percentages and then go and put them into the right accounts. You then transfer all the money in the profit account to the other profit account and transfer from the bank account to the other bank account. And I think when I was looking at this in the book, basically what they're saying is put the money in a place that you can't get to. So put it like, and I did this with my twins, we set up a savings account and they've got to phone the bank and then get approval. And then it takes 3 days for it to come into their account. So they can't impulse buy. They have to forward plan how they're actually going to get it. And that was the whole purpose of this. So, and I will send you these notes as well. Where was it? Page. Here we go. Here we go. So this was really interesting. Okay. Always allocate money based upon the percentages to the accounts first. Never, never, never pay bills first. So if you commit to doing profit first, never, ever, ever pay bills first. The money moves into the income account to your profit account. So it goes into your profit account, your owner's compensation account, your tax account, your operating expense accounts. Then you pay the bills from the operating expenses account only, no exceptions. And if there isn't money left in the expense account, you do not pull money from the other accounts. It means you cannot afford those expenses and you need to get rid of them, or you need to make more income. And that's on page 45 of Profit First. And I think I'm going to like tattoo it to my forehead, or, you know, I think that was probably one of the most really beneficial things that I read. The next thing was removing temptation, meaning that the accounts are hard to reach and painful to get that money out, so that there's no temptation to borrow from other accounts or from yourself. Get a rhythm going, meaning that twice a month on the 10th and the 25th, you put it into your bank account so that you go and you pay your bills then and then only. So those there were probably like one of the most beneficial things that I read. So get your tax account, your GST account out of mind. So get those savings accounts out of mind, away from you, so you cannot access them and you cannot cheat. Okay. For me, it made me relook at my expenses and go, I actually got fired one of my staff members, and I went, this person, I'm paying them this amount of money. They're actually not delivering 100% on what I want. It's not, the value of that person is not actually beneficial, and it's messing up my percentages in my expense account, in my salary, staff, and wages account. It also made me realize that I need to systemize things better with my staff. So the 2 staff members that I've got, I now have a weekly meeting with them, and I'm now making them more systemized and more efficient, so that I'm getting more out of them for the time that I have with them, because they're being unproductive, because they're fluffing around. So if I can get them more systemized, they can be more productive. They can give me more hours. They can do more in the hours that I give them, which was really beneficial. Oh, Clinton, excellent. So Clinton has shared with us the Google Drive of the Aussie author, Profit First for Tradies. Oh, that's very beneficial. Thank you. Clinton, you might want to meet Greg Smith from Adam's The Answer. He's also a New Zealand fella. So it'd be good for you to connect with him. All right.
Kiwi.
Not Kiwi. So,
I'm not a Kiwi.
aren't you? Why do I always say you a Kiwi?
Settle down, Chantel.
It must be it sounds like you a Kiwi.
No, I just like them.
Oh, okay. I reckon your accent is like a Kiwi. Although some people call my accent a bit like a Kiwi, but from South Africa, my partner's from New Zealand. So same, but different. All right, guys. So what we'll do is we'll stop the online people there, but they can access all the resources on the blog, on the website, so that'll be on chantelgerardi.com.au in the blog section. You can access all the recordings and additional resources there.